Hello and welcome everybody. I'd like to start with a virtual hello to everybody watching. Just like so many other workers across the world, we're all here today in our own home offices and spaces. So very fitting for the time. And I'll start with a brief introduction for you guys. I'm Scott Davis, Vice President for Small and Medium Business at CenturyLink. And at CenturyLink, we think small is big as it pertains to businesses. And I think everybody has heard, lots of endearing terms about small businesses. They're often referred to as the backbone of America. We at CenturyLink are fortunate to have hundreds of thousands of small business customers. And internally, we're doing a lot to ensure that we have resources in place for our customers, ranging from things like our pledge to the FCC to keep Americans connected. We've got special billing and handling procedures for customers who need financial assistance. And we even have some free and reduced offers for products and services like CenturyLink Engage that are really focused around helping customers adapt to remote working environments. And you can learn more about all of those things that we're doing at CenturyLink by visiting our webpage. I won't read the website address because it can get complicated, but certainly if you just go to CenturyLink.com, you'll see right at the top of the page, there's a banner that will redirect you to all of our COVID-19 special handling and everything we're doing to keep our customers, employees, and our network safe and reliable for the environment. And frankly, I'm proud of everything we're doing at CenturyLink. Internally as a company, I think we've got thousands of workers that are on the front lines as essential workers. We've been able to adapt to our own unique challenges in transitioning our workforce to remote environments where possible. And so there's a lot to celebrate in our ability to successfully adapt to that environment so that we can stay operational for our clients. And I think, one of the things we wanted to do was to do more for our SMB customers. And so today we've brought on our industry experts and friends at Deloitte and Touche LLP to talk about things like the CARES Act, the Paycheck Protection Program, or otherwise known as the PPP, the Economic Injury Disaster Loans, EIDL, tax deferrals, and employee retention credit, and mainstream lending. So you can tell there's going to be a lot of great stuff that we're going to talk about today. So much so that that's why we're all meeting today, is there's so much out there that sometimes it's hard for our customers or SMBs to navigate all of the complexity associated with the different options available to them. And speaking of our experts and friends at Deloitte and Touche LLP, we've got two industry experts here. The first one I'll mention is Karina Ruiz. She is a partner from Deloitte and Touche LLP who will talk to us about the Main Street Lending Program. And then we also have Jim Jones, a managing director from Deloitte and Touche LLP, who has clients in the field with regards to the Paycheck Protection Program. So all really great stuff that we're going to be talking to you about today. And just a quick heads up to our audience, questions submitted to the chat that aren't addressed in this webinar are going to be addressed after the event. So we'll find a way to get that information out there. And then just to give you a little bit of radio edits or disclaimer before we get started, that you need to know that Deloitte's comments in the webinar contain general information only, and Deloitte is not by any means of this webinar rendering professional advice. So before making any decisions or taking any action that may affect your business, you should definitely consult a qualified professional advisor. And with that being said, for anything that we're talking about today, it's a very dynamic and changing and fast changing environment. So please refer to all of the public entities that we're going to be talking about and their websites, to get the most current information at any given time. So with all that being said, and now that we've got kind of introductions out of the way, looking forward to getting right into the content here that will help all of our customers. And let's start off with the first question. I'm going to pivot to you, Jim, and ask you if you can start off by giving us a quick overview of the CARES Act, that stimulus program as it pertains to the Small Business Administration. Given that we have all of these customers here at CenturyLink, could you give us a view of what programs might specifically benefit them?
Absolutely, Scott. Thanks for the introduction. Karina and I were excited to give your customers a look at the options available to many businesses as a result of the CARES Act. We also share your concern for your customers and wish them the best through this difficult time. As many are aware, on March 27th, the federal government enacted the Coronavirus Aid, Relief, and Economic Security Act. also known as the CARES Act, to provide economic relief to small businesses and individuals experiencing hardship from the COVID-19 pandemic. The CARES Act authorized over $2 trillion to stimulate the American economy. I'll share some information here, but for more information on the CARES Act and on recent updates, your customers can visit treasury.gov. There's a myriad of elements to the CARES Act managed by the Small Business Administration, or the SBA, ranging from support for individuals to support for corporations. The CARES Act created a new loan program under SBA's existing general business program called the Paycheck Protection Program, or PPP. The Act also provided additional funding for an existing SBA disaster loan program called the Economic Injury Disaster Loans, or EIDLs, as you stated previously. PPP loans and EIDLs are likely the first place for small businesses to look for financial assistance. I'll touch on both of them right now. The Paycheck Protection Program was created to provide cash flow assistance for small businesses affected by the COVID-19 pandemic to keep their workers on payroll. At a high level, PPP loans provide financing to cover payroll and other related expenses. Small businesses obtain PPP loans through SBA-approved lenders, with loan amounts generally limited to the lesser of 2.5 times monthly payroll costs and $10 million. Loan payments on the PPP loans are deferred for 6 months. They carry a 1% interest rate and have a 2-year maturity. PPP loans are 100% guaranteed by the federal government and are eligible for forgiveness if the borrower maintains certain levels of employment during an 8-week period following loan disbursement. To qualify for a PPP loan, you must be a small business, which is generally defined by SBA as a business with 500 or fewer employees, subject to certain tangible net worth and net income exclusions. Certain other businesses, namely those in the accommodation and food service category, with greater than 500 employees, may be eligible for a PPP loan as well, assuming they meet SBA size standards. For more specifics around eligibility and other PPP guidance, I would encourage your customers to visit SBA's website at sba.gov. The CARES Act also provided additional funding for SBA's economic injury disaster loans. These loans provide working capital to eligible small businesses that have incurred economic injury as a result of the presidentially declared COVID-19 national disaster. Disaster assistance basically comes in 2 forms. One is an EIDL emergency advance of up to $10,000, which does not have to be repaid, and EIDLs themselves of up to $2 million, which must be repaid. For eligible businesses who've applied for an EIDL loan but have not yet been approved, the SBA also offers an express bridge loan of up to $25,000 while a business is awaiting final decision. Again, there's a lot of important detail to know, and you can learn more from SBA's website.
Yeah, thanks, Jim. I think a lot of really great details there, and frankly, it feels a lot like like we talk internally at CenturyLink with acronyms, with the whole PPP and EIDL programs. And to that point, you know, they sound very similar. Can you tell us a little bit about the difference between the two?
Sure. At a high level, the difference between PPP and EIDL is the loan purpose. With PPP loans are used to cover payroll and other expenses, and EIDLs are used to address lost revenue and working capital needs. I would note that small businesses should work with their lender to confirm PPP and EIDL eligibility and decide whether to apply for either form of financial assistance. Additionally, as of today, April 29th, the SBA is not accepting new EIDL applications based on available appropriations funding.
Got it. No, thank you for clarifying that. I think that will be helpful for viewers to kind of understand that difference between the two programs, and really great programs that are available to small businesses and medium businesses, particularly any as defined with the 500 or less type of entity there. But let's talk a little bit more about the Paycheck Protection Program, or the PPP as you put it. Since we've been reading so much about it in the news lately, we all saw the first round of funding got exhausted really quick, and the government has released another round of funding in response. What's the latest, and what do you think our customers or our viewers can expect there?
Absolutely. As your customers have no doubt been reading in the news, the PPP story has been evolving a lot over the last few weeks. In fact, news has even come out as early or most recently as today, this afternoon. Here's what we know as of today. The initial funding for PPP, obviously the $350 billion was depleted on April 16th, like you said, after about 2 weeks of availability. An additional $310 billion was made available through the Paycheck Protection Program and Healthcare Enhancement Act. And I don't think we have an acronym created yet for that one. That was enacted on April 24th. The SBA actually began accepting applications for the new round of funding on Monday, April 27th. And despite some delays experienced by lenders accessing the SBA loan submission portal, I suspect it will not take as long to deplete this funding as in the first round. It's been reported that there was a significant backlog of applications piling up at lenders waiting to submit. However, as of today, and I checked the website just a few hours ago, the SBA has not indicated that funds are depleted. But for the most up-to-date information, I strongly recommend that your customers check out SBA's website.
Yep, no, that's really good advice to our viewers here. I think this is a dynamic environment right now where we're constantly getting updates. So visiting the website for the most current information is always probably the best protocol. And but for now, can you tell us, for those customers who have been able to submit their request for the PPP, what are the next steps that they need to take in that journey?
Absolutely. With respect to PPP, and assuming your clients were approved and funded, the next step is preparation for the forgiveness process. Unfortunately, as of today, the SBA has not yet released guidelines for loan forgiveness, but your customers should expect the request to produce support materials regarding certain certifications made by them on the loan application, especially as it pertains to payroll costs. Your clients, again, should continue to consult with their lender and should check SBA's website for updates on the program and the guidelines pertaining to forgiveness.
Yep, well said. Appreciate the guidance again. And certainly I think our viewers will continue to keep checking the SBA website there, and appreciate all the extra detail you went into on the PPP. It's very helpful, Jim. So, you know, another question for you is, are there any other relief programs that you think would be helpful for customers to be aware of outside of what we've talked about already?
Sure. In addition to the programs managed by the SBA, the U.S. Treasury Department, Internal Revenue Service, and the U.S. Department of Labor have also made available several payroll tax relief measures to small and mid-sized businesses. Two of those have been through the CARES Act, and two are through the Families First Coronavirus Response Act, or the FFCRA. You have another acronym. From the CARES Act, the IRS offers the CARES Payroll Tax Deferral Program, where employers can defer paying their portion of Social Security taxes. Half of the employer's portion must be paid back by December 31st, 2021, with the remainder due by December 31st, 2022. Employers of any size are eligible for this deferral, but it's important to note that if a business is receiving PPP loans, these taxes can only be deferred until they've received notification that their PPP loan has been forgiven. Also, as part of the CARES Act, is the Employee Retention Payroll Tax Credit, again for employers of any size. Eligible employers are entitled to a refundable payroll tax credit for up to 50% of $10,000 in qualified wages paid to certain employees after March 12, 2020. However, if an employer is receiving a PPP loan, they are not eligible for the payroll tax credit. Then from the FFCRA, there are two other programs that I'll touch on, both of which apply to employers with fewer than 500 employees. The first is the Emergency Paid Sick Leave Act, where eligible employers are entitled to a fully refundable tax credit for up to 80 hours of paid sick leave for employees who are unable to work due to COVID-19 related circumstances. The second program under FFCRA is the Emergency Family and Medical Leave Expansion Act. This program requires certain covered employers to provide an additional 2 weeks of paid sick leave and 10 weeks of paid expanded family and medical leave for a child whose school or child care provider has been interrupted from COVID-19 related circumstances. Covered employers may be entitled to a dollar for dollar reimbursement through tax credits for all qualifying wages paid under the FFCRA. For all of the four programs I just mentioned, it's important to read the fine print and understand the eligibility criteria and stipulations. It's important to visit the IRS and Division of Labor websites at irs.gov and dol.gov respectively to learn more about these programs. And of course, your customers should consult their tax advisors.
Yeah, thanks for going through all of that, Jim. I can see now why our customers may be having a hard time navigating this landscape. It's sometimes a problem of there's just a lot out there, and really for our customers or our viewers, it's a question of where do I start? And so you've laid out a lot of really great resources for our folks to take a look into if they already haven't taken advantage of those programs. And it's great that there's so much diversity across the programs and different groups that really there's a lot of access for different types of our customers, small businesses, depending on their varying needs during this time. So appreciate you kind of going through all of that. And I'm gonna punt over to you now, Karina, and ask you a question around, what if a company isn't able to get a PPP loan and due to exhausted funds or maybe some other reasons, what other options exist for small SMBs?
Sure, thanks Scott for having us. So I would like to say before I start with the Main Street lending facilities that for smaller businesses, they should look at state level programs that might be available to you. You must go to the website of the respective Chamber of Commerce within your jurisdiction for more information. With respect to the Main Street lending facilities, some folks may be familiar with this, others not. Basically, the Federal Reserve, as part of its priority to support small and medium-sized businesses, have allocated $600 billion in funds to buy back loans that banks will issue to small and medium-sized businesses. And that's what they're terming as the Main Street lending facilities. There are two of them. So overall, what this means is if you're a company that have no more than 10,000 employees or no more than $2.5 billion in revenues in 2019, so that's an or, you would generally be eligible for this program if you're a US-based company with majority of your business here in the US. The or is important so that if you happen to have 15,000 employees, but your revenues are under $2.5 billion, you could still avail of these programs. Or if you're greater in size, over the $2.5 billion mark, but have fewer than 10,000 employees, you can still avail of this. And this was a proactive measure from the Federal Reserve to really support companies that have more than 500 employees that your viewers might be part of, right? So this is a program for that. I would say just in general, these Main Street loans still have to be originated and underwritten by your banking partners. And these banks would be any bank that is a US-based bank, FDIC insured. So it doesn't have to be SBA approved. Any bank that is a US-based bank, FDIC insured, as well as what happens is that the Fed will buy back the loans from these banks. So these are in general the terms on the Main Street lending facilities. I would say that as of today, April 29th, these regulations have not been finalized. And it has taken basically the Fed about more than a week really to read through over 2,000 comment letters coming from different groups to try to make changes to this. So as Jim had alluded to before, please, for the latest and greatest as to when you review this, look at the federalreserve.gov website for the latest news.
Yeah, I think that's great. I think the or is really helpful to kind of understand the difference between, you know, the variables that could kind of enable businesses to pursue these options. Can you touch a little bit on, you know, the difference between PPP and EIDL and whether the loan, you know, isn't forgivable or it is forgivable?
So understood. So basically just a little bit more on the Main Street lending facilities. And then we'll touch on the differences between PPP and EIDL. So for Main Street lending, there are two facilities. One for what we call the Main Street new loan facilities. So if you are a business that's eligible based on requirements we discussed, and you have, say, a letter of credit, a revolving letter of credit, you have no other loans in place, you can go to your banking partner and ask for up to $25 million of a loan. Or there are earnings before interest, tax, depreciation, and amortization, or EBITDA calculations to limit that. But in general, around 25 million or lesser, 4 times EBITDA. That could be available to you. However, if you're a company that has a term loan, a structured loan already that you've drawn on, meaning let's say you've got a term loan with a bank of, you know, $5 million, $10 million, $20 million, the bank may upsize your loan, meaning increase your loan of up to $150 million or the lesser of 30% of your outstanding debt, or no more than 6 times EBITDA of all of the debt that you have. So there are lots of regulations around this, but essentially what the Fed is trying to do is, if you need money now, go work with your banking partners. They can upsize or increase the loan facilities that they provide you, and all of these are loans. None of these can be forgivable. To your question on how it differentiates with the PPP, all of these are loans. You work with your banking partners, and as soon as they give you a loan, say they give you a loan of $1 million, which is the minimum requirement, that $1 million, the bank will then sell off 95%. So 950,000 of that, they will sell back to the Fed and then turn around and be able to loan another 950,000 to a new customer. That's really the program economics and dynamics. So to note, again, a little bit eligibility requirements we've discussed. However, it is something to note that there are no credit rating required. So sometimes when you have a loan, they require you for credit ratings, not for this one. Even if you've availed of the PPP, the PPP, you can still avail of one of these 2 loans. You can't have these 2 loans in conjunction, but if you have PPP, you can still avail of either the new facility or the expanded facility. However, the government will, and your banking partners will seek your certification for certain things. For instance, that the proceeds of these loans are not used to repay any existing debt until the Main Street lending facilities loans are paid in full. You have to attest to the fact that these loans are required due to financial difficulties experienced related to the coronavirus pandemic. You have to be able to show that you're making responsible and reasonable efforts to maintain payroll and retain employees. If you're a public company, you are not allowed to repurchase your stock, and you may not be allowed, or you're not allowed to pay dividends during the loan period up to 12 months thereafter. And there are executive pay restrictions on top of this for the same duration. These loans are for a 4-year period. They are typically priced at between 2.5% up to 4% over and above the secured overnight financing rate, the SOFR rate, which the banks relate and interact with one another. And then on top of these, the borrower is required to pay the lender 1% of the principal of the originating loan. So there are additional fees associated with these loans on top of your interest rates. There are more sort of requirements we suspect that will be coming forward, but these are the things that we have visibility to now at a higher level, Scott. And I think that might be of interest to some of the viewers on this call.
Yeah, no doubt. I completely agree with you and appreciate you kind of breaking out some of the differences between the PPP and the EIDL, or as you renamed it there, the triple P, or maybe we'll get into P cubed, but anything that doesn't help it trip over your tongue, I think will be good, but a lot of great information there.
Absolutely.
And Jim had mentioned earlier that the PPP recipients aren't eligible for the employee retention credit. Does a similar constraint apply for the mainstream funding and the employee retention credit?
Great question. As of now, there are no restrictions. So you still can avail of that retention credit. So I do think that as you're looking at all of these different facilities, it is very important for you to work with your tax advisors, your legal advisors, as well as your banking partners to make full use and effectiveness of the facilities that are available.
Great. Well, I think this information has been really eye-opening to me and to us here at CenturyLink, and hopefully even more so to our viewers and customers that need help during this time that they're challenged with all of their unique challenges as different types of businesses across the market. So I really want to thank Jim and Karina, you for your time and for your insights. You all being industry experts, taking the time to kind of share more of the details, that the inner workings of how folks can navigate through this. It's been very helpful. And I also want to let our viewers know that if we didn't get to your question, you know, that all of our open questions are going to be addressed by the CenturyLink team after this session. And so we'll be posting those responses. And I think in general, you heard this through the commentary here, is that this is a dynamic environment where a lot of these situations are changing to meet the growing demands of SMB businesses. And so a lot of the information can be found at either SBA.gov, IRS.gov, Treasury.gov, and FederalReserve.gov. So lots of great programs, a lot of diversity across the programs and different dynamics to consider, but it's certainly been helpful to hear from our partners and industry experts at Deloitte on how to navigate best. So I want to thank everybody for your time today, and if you have questions, feel free to submit them and we'll get to them after.